Wall Street closes mixed. The Nasdaq corrects as minutes from the January Fed meeting indicate officials are cautious about cutting rates too quickly. Shares of Nvidia pop over 10% after hours after the company reports a 260% jump in revenue. Asian markets trade largely higher, with the Japanese Nikkei hitting a record high. The GIFT Nifty is indicating a highest year for the Indian market. And crude prices rise as the U.S. Fed minutes suggest that rates have peaked. Brent currently trades at around $83 a barrel. Grasim is all set to enter the paints sector. Chairman Kumar Mangalam Birla will launch the group's Opus Paints business today and inaugurate 3 plants in Panipat, Ludhiana and Chayar in Tamil Nadu. The cabinet approves fair and remunerative price for sugarcane at 340 rupees a quintal for a basic recovery rate of 10%. For factories having a recovery rate of 9.5%, the price is fixed at 315 rupees a quintal. Good morning and welcome to Power Breakfast. I'm Pavitra Parekh. Those are all of the top headlines that we have for you this Thursday morning. That big global cue is out of the way that we were tracking the U.S. Fed minutes. And on the back of that, U.S. did definitely have quite a mixed session, a little bit lower as well. But for our own markets, for Asia, the start is looking quite good. So across the Asian markets, it's mostly in the green. You have the Nikkei markets, which are leading the gains this morning. It's an over 500-point move there, so over 1.5% for the Nikkei markets. You have Taiwan on your screen. That's doing quite well as well, so around 0.8% that the Taiwanese market has put on right at the start of the trading session. The other markets which are holding quite well, you have Shanghai, Kospi. It's not too much of a gain, but they're at least starting with some amount of positive. The Hong Kong market, like you can see, has just slipped into the red. Not too much of a cut at all, but it is mildly lower right now. And you also have the Straits, which is just about slipped into the red right now, just a few points lower for both of those markets, but largely positive as far as Asia goes. Let's also bring up the GIFT Nifty for you now, because after that last couple of hours sell-off that we saw yesterday, it is indicating that the start for our own markets should be around 60 points in the green. So let's see how we go from there. But for now, looks like a positive open for India. But let's also talk about the United States now, because like I mentioned, we got pretty mixed cues coming in from Wall Street. The Dow was up 48 points. The S&P 500 was just marginally higher, around 6 points higher. But the tech-heavy Nasdaq, that continued its 3-day losing streak. So if you look at the Nasdaq, it was down around 50 points, so 0.3% at the end of the trading session. However, it was a day of a lot of global cues for, the markets like we've been mentioning. So Wall Street first had all of the Federal Reserve officials, which indicated that they are not in any kind of hurry to be cutting interest rates. They expressed both optimism and caution around the inflation trajectory. By the way, all of the U.S. futures are trading a little bit higher right now. Not too much higher, but they've definitely recovered a fair deal. Despite the FOMC's confidence that inflation is receding, some members cited the risk of moving too quickly on rate cuts. So that is an important, cue that really came out from the U.S. We have CNBC's Steve Leisman, who's here to summarize all of the highlights from the January Fed minutes.
Juicy and hawkish, if we can mix a couple metaphors. Those minutes show most officials were concerned about inflation turning hotter and concerned about cutting rates too quickly, even before the January upside inflation surprise that the government reported a couple weeks later. The minutes emphasized the risk of cutting rates too quickly, showed concerns about inflation progress potentially stalling, said there was upside inflation risk in stronger demand and loosening financial conditions, and in geopolitical risks that could undo the progress from the supply chains normalizing. Only a handful of committee members staked out what you could even call dovish positions that showed greater concern for an economic downturn, but none appeared to argue for near-term rate cuts. The chance of that May rate cut now trading at the lowest probability of the year, just 32%, with more confident bets now on rate cuts centered on June and July. Officials said it would be appropriate, this was the one dovish part of this whole thing, to begin discussion of slowing and ending the balance sheet reduction at the next meeting. That's the one coming up in March. But a few said, you know what, this balance sheet runoff may continue for some time, even after the Fed begins cutting interest rates. If the Fed was this hawkish before the poor January inflation data, there seems little doubt that their positions have hardened since. They all note, many of them note considerable inflation progress, but it doesn't look like it's motivated them to take any policy action in response to that progress.
All right, Steve, thanks a lot for getting us all of those highlights. But staying with the January Fed minutes and the Fed's concerns around inflation, listening to some important opinion, this comes in from former Dallas Fed President Robert Kaplan.
If I were sitting at the Fed, I'd want to see more evidence that this inflation improvement is going to continue. And the reason that I'd be very cautious is substantial amount of fiscal spending. Inflation Reduction Act spending, Infrastructure Act, unspent ARPA money. I think while monetary policy is very restrictive, fiscal policy is very stimulative. And so I would be on guard about that if I were at the Fed.
Hey, that is the word coming in from Robert Kaplan. But let's also bring you a word from Bank of America CEO Brian Moynihan on where he really sees the Fed policy and rates going.
The air potential is actually to not bring rates down and normalize soon enough, just like it was not to raise rates fast enough. And you can hear the Fed governors and the chair talk about, well, maybe we didn't move fast enough back before when you saw signs of inflation. They have the same possibility. And so that's what they're wrestling with. Our view is that our team's view is 3 cuts this year would bring the economy back into sort of equilibrium at the end of 25 with a Fed funds rate in the mid, 3.5-ish.
All right, that is all of the opinion that we're tracking from the US this morning. But let's also talk about the big earnings which came through on Wall Street that everyone was really tracking. Shares of the world's most valuable chip company, Nvidia, zoomed over 9% in after-hours trade. This after the company posted a solid beat in the fourth quarter. So revenue and sales both came in higher than was expected. The total revenue has jumped 265% from what we had a year ago. It was led by strong sales for the company's AI chips for servers. Additionally, the data center business for Nvidia, which comprises the majority of Nvidia's business, saw sales rising over 409% on an annual basis. The company, meanwhile, is also guided for better than expected revenue in the current quarter. So, of course, on the back of that, you do have some positive cues which are seeping into the rest of the U.S. markets as well. That's why a lot of the U.S. futures are well in the green right now. But that is everything that we're tracking as far as the global markets go. Let's talk about what this really means for our own markets and everything that you should track in terms of stock-specific action as well. We have Hormaz and Sudarshan here with the trade setup this morning. Guys, a very good morning to both of you. Hormaz, the last couple of hours yesterday kind of ruined the mood a bit. Looks like we'll start well, but take us through what we should watch.
Just as all good things come to an end, the party had to end sometimes. It's not ended, you can't say that. It's taken a bit of a pause. Maybe it might resume today. But as the 6-day rally ended yesterday on the Nifty, and the good bit though was that the index managed to hold on to that 22,000 mark on the downside. It's briefly slipped below it, but managed to close above that. It has done so for the last 4 sessions as well. And it is only fair to say that the rally that we've seen in the broader markets all along, the greater pain was felt over there as both the mid-cap and the small-cap indices fell over 1% each yesterday, with a lot of stocks reacting there as well. A sector that has bucked the trend though, as most of the sectors were down yesterday, a sector that bucked the trend was the real estate index. It's been doing well over the last week or so now. It was higher on Tuesday as well, and it continued with that performance on Wednesday. But the pain point, a major pain point that has been there is IT, and the Nifty IT index almost fell to a 3-week low yesterday, with Infosys, TCS, HCL Tech, all of them contributing to the downside on the Nifty. So pain coming in from the technology stocks. But all eyes were on 2 major global events last night, as you highlighted earlier on FOMC minutes as well. Saying that there will be no rate cuts until they see greater confidence on receding inflation. And just as towards the close of trade, the indices saw a brief spike from the day's low, and that was because in anticipation of Nvidia's results, as you just highlighted as well. And for those who are wondering whether Nvidia can sustain growth, the CEO said that the conditions are excellent for growth in 2025 and beyond. So some key important data to watch out for today. The inflation data coming out from the Eurozones. We'll keep an eye out on that. And since today is Thursday, we'll see initial jobless claims from the US as well. Bit of a pause, but GIFT Nifty is indicating a positive start, so the rally may just resume today as well.
All right, let's see if it does. Hormaz, thanks a lot for getting us all of those cues. Let's also talk about all of the stocks that Sudarshan has compiled for us. Sudarshan, I know Grasim is on top of your list.
Yeah, so I'll be starting with Grasim, and also remember that other paint stocks will be in focus. Kumar Mangalam Birla will be launching Birla Opus Paints business today, and he'll also inaugurate 3 Birla Opus Paints plant at Panipat, Ludhiana and Cheyyar. NBCC has got in principle approval from Greater Noida Authority to develop 5 Amrapali projects worth rupees 1,000 crore. Brigade and PVP Ventures will be in focus. Brigade has signed joint development agreement with PVP Ventures to develop residential project in Chennai, and revenue potentially seen somewhere at rupees 2,000 crore, and PVP to get 40% share of revenue from this project, and company sees at rupees 1,000 crore over 5 years. Grow and Well to consider bonus issue on February 26. Home First Finance, IRDAI has granted composite license for soliciting life, general and health insurance. Eureka Forbes sources say promoter will be selling up to 12% stake via block deals, and floor price for the same is at rupees 495 per share, which is at a 3% discount to current market price. Keep an eye on space sector related stocks. Stocks like Apollo Micro, BEL, HAL, MTR Tech and Walchand Nagar. Cabinet has approved new FDI policy which will pave the way for 100% FDI in the sector. Keep an eye on rice stocks, KRBL and LT Foods. Government has extended export duty imposition of 20% on parboiled rice without any end date. Sula Vineyards, Maharashtra government has notified extension of wine industrial promotion scheme for 8 years. And lastly, SRF. Company has filed writ petition before Rajasthan High Court. Company seeks relief in terms of quashing the demand raised by GST authorities. Remember, in August 2023, GST had conducted searches in its factory premises in Rajasthan.
All right. Thanks a lot, Darshan, for filling us in with all of that stock-specific action. We also have Nigel in here now with all of the cues from the futures and options space. Nigel, good morning. What are you tracking?
Well, morning, Pavitra. Yesterday, the markets lost their way a little bit towards the end of trade, but I don't think there's any big reason for concern because there appeared there was more unwinding of positions that we saw both on the Nifty and the Nifty Bank. The open interest was a little bit lower. If you look at the Nifty Bank, well, the intraday chart tells you a little bit of a story because yesterday it played out weekly expiry. And was holding firm till most of the trading session, but some part of that could be an element of weekly expiry that played out. The good news, though, is that it still continues to trade above its averages, the technical averages. And the 50 DMA, well, that's the nearest possible level that we're looking at. You know, it managed to, it's still above that level. So that's an important point as well. What did the FIs do? They added close on 10,000 long contracts. That was in the ratio of close on 4 longs for every 1 short position. And if you're looking at the options data, well, the bears will feel that they are on top, particularly given that today's expiry. The bulls will want to get closer to around the 22,200 odd because yesterday there was aggressive writing. Just take a look at the writing that we saw. On both those two strikes, the premium came down by a fifth in a single trading session. So that's the opening number, and that's where they closed up in terms of the premium. So the writing of these calls, well, those bears will be feeling on top. What's the range? Well, on the downside, the 21,950. That should be a bit of a support zone. The 22,000 put had a fair bit of open interest. Yesterday, there was some unwinding, but that's why I'm talking about the 21,950. And yesterday, we went to 22,250 from where we did a U-turn. So that's, you know, a bit of a resistance in the near term. Back to you.
All right, Nigel, thanks a lot for laying out all of those cues for us. Around 55 points higher is where we're at on the Gift Nifty right now. We do need to take a short break, but on the other side, we're going to talk all about Grasim because they're going to launch their Birla Opus Paints business today. All the details on the other side. Welcome back. Hope you're all having a good morning. Let's talk about Grasim now because the company is all set to enter the paints sector. Chairman Kumar Mangalam Birla will launch the group's Opus Paints business today. So Mangalam is here to tell us more about that. Mangalam.
We're here on our way to Panipat to attend the opening of Birla's Opus Paint business factory and also the mega launch of it. Importantly, a little over 3 years ago when the Birlas had first announced their foray into the paint business with a war chest of nearly 10,000 crores, a lot on the street were worried about what happens to this paint industry itself, which currently has, you know, more than 50% share led by Asian Paints and Berger Paints itself. Importantly, apart from, you know, the launch of the paint business, what we'll be looking at is what are the kind of revenues Birlas are targeting in the next 3 or 5 years in this space. At the same time, what is the war chest that they have for marketing, advertising, and importantly, how do they go about breaking the strong foothold that the top 3 players have in the paint industry in India itself. We're not too far away from reaching the venue, but as we do that, we will keep you updated.
All right, Mangalam, we trust to, keep coming back to you with any updates that you can get on this. It's going to be an important stock. This, along with the entire paints pack, in today's trading session. But with that, we do need to get into a short break. When we come back, we're tracking all of the cues from the commodity market. Stay tuned. We'll be back in 2. Welcome back. You're still tuned into Power Breakfast. Let's get you excerpts from an exclusive interview. India is one of the beating hearts of Shell. That's the word coming in from the CEO of the British energy giant. Speaking to Shireen about Shell's India expansion, he said that India is a talent and innovation hub for Shell. Listen in.
The Indian energy transition is very much aligned with what we see at Shell and what our strategy is. We fundamentally believe in the role of a company like ours in providing energy security at affordable prices, as well as supporting the decarbonization of the energy system. And that's exactly what the Indian government is aiming to do. So we're very, very aligned. India serves a few key elements of our strategy. One, it is a core hub for us from a talent perspective. Actually, just recently, India has become the largest Shell population in the entire world. Over 13,000 people, engineers, technologists, AI specialists, all serving the Shell group across all the locations that we have. And so that is really, and that's why I call it the beating heart here, just because of that incredible talent base.
All right, that is the word coming in from the Shell CEO. But some more important news, the cabinet has approved the sugar FRP for the 2024 to 25 season. So Manisha is here to tell us more. Manisha, take us through what's been decided.
Well, thank you for that, Pavitra. We've been discussing this in the last 24 hours on the expectation of this, and the government notification has come directly to that effect. So the FRP for sugarcane for 2024-25 has been hiked from 315 to 340 a quintal. I mean, this is one of the highest raises in FRPs that we have seen in the last many years. There are a couple of reasons that the markets believe that this has been done. One, because the next cane plantation numbers have been on the lower side. So the increase in FRP would perhaps encourage farmers to go ahead with more cane plantation. The second point is that there is a farmer agitation going on in the north of India. So this is also done to ensure that the UP farmers are not becoming a part of this. Now, when you look at the sugar prices itself, we have seen them trade very stable. The government in the last 1 year has taken various measures to ensure that the sugar availability is enough, even to an extent that the ethanol diversion was cut into. So markets do see this as positive. It does mean that you could be looking at higher sugar production going forward in the next year. For the sugar stocks, though, for the very near term, it could be a bit of a setback because they suddenly will have to pay much higher for the FRP for accessing that in the next season.
All right, Manisha, got that. Thanks a lot for taking us through all of those details on the sugar FRP for this season for 2024 to 25. With that, we're out of time on this edition of Power Breakfast. Asia is looking good this morning. The Japanese market's up over 600 points. For our own markets also looks like we will start well in the green. The implied open is now 70 points in the green. Thanks for tuning in. We have Bazaar Morning Call after this short break.